Well, hello. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. My name is DannyDealz, and on behalf of executive producer Hurricane Lopez and supervising producer Stock Karen, we would like to welcome you to the program. Today is May 25, 2023. It's 8 a.m. out here on the Pacific Coast. 11 a.m. in NYC. Hope it's a great day wherever you find yourself today. Hope you're doing well. The market is choppy today. NASDAQ is up, but you'd never know it if you own a lot of those stocks. I don't know what the heck is going up. Certainly not much in my portfolio, but I digress. Today I want to talk to you about Paysafe Limited, ticker symbol PSFE. Now, if you know anything about horrible SPAC deals and just huge smelly turds that absolutely destroyed all the retail investors, all the SPAC investors. I think the only people who made money here were the folks who sponsored the SPAC and got a bunch of free shares. That's how SPACs work. Very, very few of them actually become successful publicly traded companies, at least during that SPAC mania that took place a couple years ago. Um, because there's several reasons. The financing structure is usually not favorable to the company. It's favorable to the people who created the SPAC. And then you end up with a lot of dilution. I know the company, wasn't public, as private, but the founders have certain equity. You expect, the people that own the private company would get capital, and then the people that invest money into the SPAC to take it public with the reverse merger, they would get, equity or shares. But what happens is the SPAC sponsors, these vampires and vultures, they get a ton of shares for like no money. So you end up just printing all these shares, and they give them to guys like Foley and, the former executives with Paysafe. And you just end up with all of these shares that these guys didn't pay for. And then, once the turd ends up going public and you realize that all their projections were complete BS, just lies. Oh, yeah, we're going to have organic top line growth throughout the next 5 years of 8%. Bullshit. You have a company that is doing absolutely nothing, that's not growing at all, wasn't growing at all at the time, wasn't making any money, and basically everything they pitched in that SPAC to take this thing public was just a pack of lies. And I think we all, like, if you I was invested in this company, I thought it was actually a good company because I believed the numbers that they were putting out. I was looking at the future of, like, you know cash management and how that would fit in with the new digital age, and I was looking at the online gambling and what a good reputation Paysafe had. There's something I refer to as institutional gravity. People might say, like, the value of your name, goodwill, whatever you want to call it. But Paysafe has quite a bit of it. They've been around a couple of decades. They're very trusted in Europe. They're a leader in a couple of different transaction spaces, and particularly the gaming space, which is, a growth market, particularly in the United States. It seems to have stalled out a bit in Europe, but still new states opening up all the time. Paysafe making new deals, but you remember we were all waiting for earnings, and Paysafe, I think, was sitting at like $8. People were buying into the ER, and then, that's when the atomic bomb dropped, and the stock basically got cut in half overnight. Went from, I believe, 8 to 4, and then just fell off a cliff from there, and it has been falling, and this falling knife has been coming down ever since. Is now the time to try to catch that knife? Um, is Paysafe a buy here? I think Paysafe is oversold right now. That does not mean I am going to rush in and buy much of the stock. If it dipped down below $10, I would certainly purchase a little bit more. I have a very small position in the stock right now, full disclosure. But I'm just, even with this drop, even with the market cap, well under half of this year's sales, I'm just not rushing into the company. And that's for a couple of reasons. If you look at this chart here, back in November of 2021, when the stock just fell off a cliff, this was that precipitous fall I was telling you about. Of course, the stock has reverse split, so instead of going 8 to 4, it's 100 to 54, whatever it is. And then the stock came down here and it's found some support in this little channel here, as depicted in yellow. So I realize this line isn't perfect and the stock drops below it a few times here, but if you actually look at this channel, it is a pretty good representation. The 50-day moving average has come all the way down to basically chase the stock as it's bled sideways and downward here, for, the last, year and a half. And then basically mid December, the stock started to make a run up. Everybody thought their last earnings were pretty good. Um, the stock, after it made that little bit of a run up, bled sideways again. So that's what the stock does. People just aren't that excited about it. And we're back. We challenged the 50-day moving average, actually went slightly above it here on March 5th, just very, very briefly, for one day, and then came back down. Not only came back down below the moving average, but then came back down to get back inside our little channel here, where we remain. Is this stock going to move? Is it going to break out? Is it dependent on the greater market? Is it dependent on interest rates? I don't really think so. I think it's mostly dependent on their balance sheet, and therein lies one of the biggest problems, is that you have a company that right now isn't making any money. Now, last quarter, they lost just $4 million in net gap loss, and a year ago that was like $1 billion because they took a massive, massive write down. So in that respect, the company's certainly on the right track. I mean, touchdown Bruce Lauthers, who Bill Foley brought in to replace previous management. He was with Fidelity, and he's a very solid guy, not a flash guy, it seems like, but he's a very solid corner office guy who knows numbers, who's disciplined, and knows how to run a company. And it is fair to say, since he was appointed, he has done a good job bringing costs under control. They've actually paid down some debt. Total debt a year ago was 2.75 billion. Now it's 2.64 billion. So I mean, that's not like miraculous, but it's over $100 billion in debt being paid down. So, you know, what I think about with this company is $2.5 billion in debt completely unmanageable, given that they have fairly slow growth and only are looking for 1.6 billion in sales. I mean, debt is almost twice their sales. They're not making any money. They do have some pretty good margins. Their operating income was 80 million. Gross profit was, almost 900 million. So on, total revenues of 1.5, last year, their gross profit was almost 900 million, which really isn't too bad. Um, when you consider that a lot of companies that are doing well in the problem with this have worse operating margins. But the problem is that previous management and the SPAC deal, I think, just saddled this company with so much debt. And I know they restructured that debt to make it manageable. I don't think Paysafe is in any danger of going bankrupt. The short on the stock is actually pretty modest. I just took a look at the real-time short interest, and the short score is not that high at all. There's only about 5% short on the stock, and there's nothing going to happen with a short squeeze or any of that. The short is just not significant enough. I don't think many people want to short this stock from a less than $700 million market cap, but there's a whole lot of difference between a company with an $8 billion market cap and you go, okay, it's dramatically overvalued, it's a piece of crap, and then the market cap down under $1 billion, it could be undervalued. Just a company is not, it's a piece of crap at any value. This company has sales, it has some legitimate value, but it probably lies somewhere in between 600 million and 8 billion, which I think it spiked to during that crazy SPAC frenzy where the price of Paysafe I think ran up near $20 pre-split. In any case, what are analysts saying about Paysafe? Their consensus target right now is $26, two holds, one sell, zero buys. If you look even at the recent ratings from Bank of America and Credit Suisse, where they both put a sell on the stock, there's still 35 and 43% upside to the stock at a 13.70 and $14.50 price rating. So the other recent rating was RBC Capital, which has a hold and a $17 price target on the stock, and that was, I believe, just before earnings. But in any case, the earnings were pretty much in line with expectations. Growth was looking quite slow. Um, Better than no growth, which is where they've been, but 5% growth on the top line is just nothing that investors are going to get excited about when a company is saddled with this much debt. Usually you think about, if you're going to buy a company with a lot of debt, you're thinking about a company that's growing fast, that's innovative, that's bringing in a lot of customers, that's increasing their economies of scale. That's not what's happening. This debt is an anchor. This company is well established. It's an older company. It's not growing. And I think the gambling revenue is just overblown. Listen, this is not a sexy company. People want to make it about gambling and artificial intelligence. I remember a year ago there was some hype about NFTs and a bunch of other nonsense. This is a payment processing company, folks. This is not, everybody wants to make everything cool and fintech and sexy, but it's not, guys. These guys exchange cash for credit. They do transactions. They do fraud prevention. They do, credit card billing. They do payments for gambling sites. That's what it is, guys. This is a, nuts and bolts company with, other people do what they do, but they do have a good reputation. That reputation is worth something. They have management that has been more disciplined, certainly, than past management, and I think they are on the right track. It's just the question is, do you want to buy the stock at these lows and wait this thing out for a period of years because the company is growing so slowly and they have so much debt that even as they right the ship, it's going to be righted very slowly and then it's going to settle. And until this debt actually comes under control and is more in line with their sales ratios of other companies, they're not going to be able to return any money to shareholders. They're just not. So if you're expecting a dividend in Paysafe, I hope you have like a decade or more to wait. Would I buy the stock right now at $10? I might buy it. If I were a trader, if I were somebody with a very long time horizon who just really believes in the space and believes that it's just a little bit too far oversold at this point. Remember, even the bears have price targets of $13 and $14 on the stock, which represents like a 40% upside from here. So, in short, guys, you could play this thing for a trade. You could do a couple of things with it. Is it going to explode to the upside like it did last time and just make that steady march up to like 24? I really don't see it right now. I'd put a price target. I'd put a price target on the stock right now, something around $18. I do believe it's oversold, but I do believe a market cap under this year's sales is actually fair, given the structure of this company. Am I a buy, sell, or a hold on Paysafe? I'm currently not going to buy the stock unless it drops a little bit more. I'm going to hold on to the position I currently do have, which is only a couple of thousand shares, nothing to speak of. But the stock is just, people, there's nothing, the stock isn't crashing, the stock isn't going bankrupt, but the stock just isn't really doing anything. And this pivot, this transition, this restructuring, instead of taking a year or two, it feels like it's going to take at least 5 years. So if you have time, patience, and are a glutton for punishment, perhaps the Paysafe stock is for you. Otherwise, I think there are probably better, more exciting fintechs out there to invest in that have better growth prospects, but there is certainly a value here. The stock has been beaten down a little bit more than I think is rational at this point, but that's this market. It overreacts to everything and it likes to punish stocks that are not making any money, likes to punish stocks that have a lot of debt and can't get things together. And there sure as heck isn't going to be any short squeeze that saves this turd. So that's Paysafe Limited, ticker symbol PSFE. The show is Un Poco Mas. We try to give you just a little bit more. My name is DannyDealz. Appreciate you watching. You guys have yourselves a great Thursday.